comes to a halt to end the week. Grayscale CEO explains why he's urging the SEC to greenlight options on its spot Bitcoin ETF. And Jack Mallers of Strike discusses the supply and demand pressures on Bitcoin pushing the price higher. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies in the red to kick off March after Bitcoin and Ether posted their best months since 2020 and 2022, respectively. Today, Bitcoin and Ether fell about 1% each by around noon Eastern, trading at the $61,000 level and $3,300 level, respectively. Solana little changed at $129. Bitcoin is on pace to end the week up about 20%, outperforming Ether, which is heading for a more than 15% gain. Both of those blue chip coins shot higher for the month of February after finishing January flat. Bitcoin ended up 45% for the month, and that marked its sixth straight monthly gain and best showing since December 2020. Ether advanced 48%, also its sixth up month in a row and its best month since July 2022. Bitcoin is so close to its all-time high now, sitting just 10% below it. Much of this rally has been fueled simply by optimism that the market is going to see the combination of increasing demand from Bitcoin ETFs and tighter supply after April's Bitcoin halving pushed the price higher. Analysts I talked to are warning, however, that investors should tread carefully into March, which tends to present seasonal risk from traditional finance that crypto may not be fully immune from. Things like contagion risk among regional US banks or even just profit-taking to cover payments around tax season. Now, cash inflows into spot Bitcoin ETFs have accelerated, and that has overpowered technical overbought signals. So you may see some grinding in the next few weeks before Bitcoin returns to its record. Okay, let's talk about the top stories. Grayscale Investment CEO Michael Sonnenschein joined Squawk on the Street this morning and pointed to pent-up investor demand for Bitcoin ETFs as a catalyst for the recent rally. At the same time, Bloomberg reported this week that GBTC has seen $7.4 billion exit across 31 trading days.
I think it's important to think about how GBTC came to market. It came to market with almost $30 billion of assets and investors of all shapes and sizes. And so we anticipated some outflows as opposed to some of the new products coming to market starting from zero. I do think, though, if we zoom out and we look at what that investor demand is like, we've never seen such insatiable demand for an ETF wrapper providing access to a new asset class like we have here.
Grayscale is urging the SEC to greenlight options on its spot Bitcoin ETF. According to Reuters, Sonnenschein told the SEC in a letter that the rejection of options on its Grayscale Bitcoin Trust would unfairly discriminate against its shareholders. Plus, the agency approved options on ETFs tied to Bitcoin futures in the past.
It really is vital. What we see here is another situation where perhaps spot Bitcoin ETFs are not being treated fairly. We have a robust ecosystem of Bitcoin futures-based ETFs. There are options traded on those products, but there are not yet options approved on the spot Bitcoin ETFs. And we believe this is a fundamental, characteristic and feature that we need within this ecosystem.
Next, a group of state attorneys say the SEC exceeded its authority in suing Kraken. Montana, Mississippi, South Dakota, Texas, and others filed a joint amicus brief in that case against Kraken, which alleges the firm operated as an unregistered securities exchange, broker-dealer, and clearing agency. The state attorneys general argued the agency was expanding the definition of an investment contract and that cryptocurrencies are not automatically securities. The filing said, quote, states have a strong interest in preventing the potential preemption of consumer protection and other state laws by the SEC's attempt to regulate crypto assets as securities. It went on to say that the SEC's exercise of this undelegated authority puts consumers at risk by potentially preempting state statutes. Finally, SEC Commissioner Hester Peirce sat down with Crypto World's Mackenzie Sigalos at ETH Denver yesterday and said the agency is, for the most part, in an enforcement-only mode when it comes to crypto. Here's what she had to say regarding enforcement actions against major players in the space.
I think everyone in this room knows that there are lots of fraudulent people people who are engaging in fraud in the name of crypto, and there may well be room for us in that area. We've brought a number of cases in that area, and that makes sense. But when you're talking about registration violations, because someone has touched a crypto asset that we then come in years later and say, that is security. It seems pointless because you're bringing a case against someone where there's no allegation that anyone was hurt, right? So this is just strictly about compliance with a registration obligation. And I'm not minimizing the importance of registration obligations, but if you're not willing to tell people what a security is, it just seems very unproductive to go in after the fact and just start picking people off for not having registered.
Mackenzie is continuing that conversation with Commissioner Peirce while at ETH Denver, and we'll have that interview for you next week. All right, for our main story, Crypto World's Kate Rooney spoke with Jack Mallers, the CEO of Strike, about February's huge crypto rally. He also weighs in on the future of Bitcoin and how it competes with other altcoins.
Jack Mallers, he's the CEO of Strike. Jack, it is great to see you. Thanks so much for taking the time.
Kate, I'm pumped. Thank you so much for having me.
I'm sure one of the reasons you are pumped is because of the price of Bitcoin. What do you think is driving some of the price action? You have been a longtime advocate, investor. What's going on with the price above 60,000 this week?
Totally. The price of Bitcoin does not suck. I think the price action is a lot simpler than people make it out to be. It's because Bitcoin is the only asset in the world where more demand can't find more supply. It's a demand supply shock to the upside. what's important for your viewers is contrast that against something like gold or something like a stock of a company. There's a lot more gold in the ground, in the earth, but there's not enough demand for us to go dig it out of the ground. If there was enough demand for gold, we would find more gold. Let's take Facebook stock, for example. If there was enough bidders for Facebook stock or Meta stock, Zuckerberg would issue more. He'd split the stock, right? So more demand, Kate, always finds more supply, except for Bitcoin. It's the only monetary asset in the world where that's not true. So more demand has to find a higher price. More demand, the supply is coming from existing holders. It's not coming out of the ground. It's not coming from a stock split. Does that make sense? So they're going to have to get the price high enough for a holder like me to be willing to sell it to BlackRock. And they got a lot more to go to bid to the upside to find that. So you're just seeing price discovery in a very scarce asset. That's it.
And now I think a lot of people's cost base is now that Bitcoin is back near an all-time high. I think that's also an important dynamic too, that fewer people are holding Bitcoin at a loss, I would think, and maybe are a little less eager to sell and take profits. Is that fair to say?
Yeah, but I also think what you're starting to listen, Bitcoin's been in a bull market for 15 years now. The highs have always been higher. The lows have always been higher.
But it's been in a bull market, but you've seen these dramatic, jumps and falls from all-time high. That's fair to say.
But yes, of course. I'm not trying to gaslight you, but bear with me for a second, because the highs are always higher and the lows are always higher. How else would you expect a new form of money to really be adopted? You want it to be a straight line? I mean, come on, what is this, Cartoon Network? So the reality, Kate, that I think is that holders of Bitcoin are starting to realize that it's the most performant money. It's always the most performant thing in their portfolio. So as Bitcoin gets distributed and recycled through holders and holders and holders, the people that are now holding it as this asset matures are never getting rid of it. Because Kate, as long as I have my house, I have my car, I paid off my college tuition, I paid off my credit card, exchange it and sell it for what? For what? It's the hardest money. It's the scarcest asset. It's the most performant thing in everyone's portfolio time and time and time again. So I think it's going to be very difficult for Wall Street to pry it out of the hands of people like me. They're going to have to bid the thing way up there because there's none left.
Well, Wall Street does seem to be getting in on this, especially with Bitcoin ETFs. What's your take on institutional demand? And they might see the asset differently than you do. Obviously, they're getting in because they see upside, but they may not be as strong believers as you are in the long-term value here. What's your take on the influence of Wall Street in this asset class?
Well, I think just generally, Wall Street and the everyday man on the street, we are all facing the same problem of fiat debasement. Is global debt to GDP is well over 300% at this point. I mean, Jerome Powell, my Fed chairman, went on 60 Minutes after I was watching LeBron James shoot hoops and made sure that I was aware that my government is on an irresponsible spending policy that's going to drive this country insolvent. So I think the fact that in the face of a hawkish Fed, gold was going bull and trading up, I mean, that's everything you need to know, that people are terrified of fiat debasement and the value of the dollar, especially in an election year. So I think Wall Street wants access to hard money, scarce assets. Nothing's more scarce. So the fact that this ETF opened, I think the timing makes a ton of sense. And then for all the people that, BlackRock doesn't really like Bitcoin. Oh, really? Well, I don't know. They seem to be buying up a bunch of it. Their clients love it. So that's what I think it is the hardest money is going to win in the face of fiat debasement. Bitcoin's the best expression of that.
You're talking about the value of Bitcoin and this store of value in the face of currency devaluation and what's going on in the U.S. and elsewhere. Pause for a second. There's a lot of institutional investors that are holding Bitcoin as this proxy for risk. They're saying, I might replace some of my high growth tech stocks and just put Bitcoin in my portfolio. Does that at all change the market dynamic in your mind?
No, I think simply put, let's go back to supply and demand, right? The supply of Bitcoin is fixed. As long as demand continues to increase, the price is going to go up. If your thesis is that it's like Tesla, I'd question that. It doesn't generate cash flow. It doesn't create cars, but whatever, fine. Do whatever you want, right? Free market maximalist. There's no one to tell you otherwise in Bitcoin. That's why it's so beautiful. And that's why it's pure humanity. Everyone has access to do whatever they want. So I think demand will increase. I think these narratives, some of them I find interesting and questionable, but the point is the supply demand is in favor of those that hold it, is that no one can print more of it, no matter who you are. And so that is what makes it so bullish now, 15 years running.
What are some of the potential use cases for Bitcoin beyond payments? That really has been, it seems like what has been proved as a potential use case. But there's things like layer twos. What could you envision Bitcoin being used for beyond store value, a payment, or a speculative investment for some?
Yeah. So I think first and foremost, the store value piece, you just cannot understate that. All 8 billion humans are going through fiat debasement. What that means in more layman's terms is every single person's fiat currency is going down every day. The dollar, the naira, the pound, every single fiat currency issued by a nation state goes down. So you have to own something else unless you just want to be poor, which none of us want, right? You got to find a way to own something else. And this is the best performant, best expression of that problem. And we all have access to it. So that cannot be understated. That is the most attractive use case that's made this thing go so viral. I think the other that's really fascinating that we focus on as a company more and more is the fact that you now have a digital bearer instrument. It's a digital physical instrument. And the fact that we can move value on the internet is fascinating. You can disintermediate a lot of payments. The fact that I can move something physical from Chicago to Nigeria instantly in less than a second, should really bring the cost down of something like a cross-currency transfer, right? So I think that there are use cases that we'll begin to see, but right now, the reason Wall Street's interested is that store of value use case. Is dollars are being printed out the wazoo since COVID, and this thing just goes up the most in the face of that.
Well, inflation is a really interesting topic in the context of Bitcoin. I think we think of currencies really from a North American perspective of, you're talking about the dollar being debased, but it is relatively a much more stable currency than what you see, the peso in Argentina. You talked about what's going on in Africa in some countries, and inflation is out of control in other countries. What about Bitcoin being used for either store of value? What are you seeing in terms of demand in other parts of the world aside from the US and really North America writ large?
Yeah, I mean, we see the same use case all over the place. And for us as a business, that's one of our main focuses, is being one of the best in the world at Bitcoin, period. We don't get distracted by NFTs. We don't care about creating our own blockchain. I don't care about what Dogecoin. I mean, come on, Kate, what are we talking about? Dogecoin is going to be valuable to society in 20 years? According to who? No way, right? And
Elon Musk thinks so, at least.
Yeah.
Is that more of a bit, or do you think that people actually think there's value in Dogecoin?
I think it's a bit. You tell me, what's Dogecoin going to do for you? I think...
Full disclosure, I'm not a Dogecoin investor, so.
No,
anyway,
I actually find all the altcoin industry antithetical to the whole thesis. It's a form of inflation to the asset class. I'm going to create Jack coin, Solana coin, Ethereum coin. None of these things act as a hard money. And so, what we've seen running Strike is that there's a lack of focus on Bitcoin being the most valuable money and the most valuable technology out of this sector, and applying it in every single market around the world. Because you're right, Kate. You want to know the person that wants Bitcoin more than the guy in Chicago? Probably the one in Nigeria, right? Probably 250% more according to inflation metrics, right? So we just have that focus. We see the demand all over the place, and it sounds like a really simple business, but it's really unique because businesses like a Coinbase are so scattered through all sorts of things, which doesn't make them bad. It just makes them very different than us. Is for every altcoin feature they build, we build a Bitcoin feature, and so we consider ourselves one of the best in the world, and just doing it all over the world has been good business for us.
All right, before we go, we mentioned earlier that ETH Denver is underway this weekend, and we'll bring you lots more from the conference on Monday. We'll see you then.